Hey guys, welcome back to We Talk Money. I think we're going to name this episode, Where Do We Go From Here? Because things are just really weird right now. And there's a lot of uncertainty. There's a lot of anger in the world. There's a lot of fear. A lot of confusion too. Like the market's just hit a new all-time high on the NASDAQ, yet we've got riots and protests and looting and anger and movements, some of which looks and feels productive and is necessary, and some of which, I don't know. What do you guys think is the path forward from here?
Well, I think Americans went into this angry and upset over what they've gone through with the pandemic. And there's been this built up tension. You know, a lot of people lost their jobs. A lot of people feel like the system isn't helping them. Wealth inequality, racial inequality, all of these things happening. And then obviously what happened with George Floyd has sparked this new revolution that we're seeing people standing up, using their voices for, trying to protest against police brutality, etc. I think that in addition to what they're trying to accomplish with bringing racial inequality to light and racism to light, there was all of that backed up anxiety over the pandemic issue too, and being kind of locked up. So it kind of feels like an explosion of emotions right now in America. It's very hard. It's very difficult. It's been a very heavy period for a lot of people, including myself.
Yeah.
So, now we're just having to work through it, and hopefully this is not all for nothing and we come out of it better and more united than when we went in. But that's, my optimism. I think our generation can do that. I think we can be more open-minded and accomplish more together. But I don't know. Yeah, I think that we went into this with a lot of heaviness as it was.
Yeah, a lot of pent-up anger and emotion and kind of a culmination of just bad things happening at the same time led to this explosion. And maybe some of it's necessary, maybe it's right on time. Maybe, hopefully we can look back on this and like you said, like this is the start of a new period where things get better with racial inequality.
Yeah, that's what I think everybody's hoping for.
Yeah. From a market's perspective, it's interesting too because, a lot of people are still very confused about what's happening in the market, and the market has been very strong. I believe it's up between 5 and 10% just in the last couple of weeks, even during this pandemic and, sorry, not the pandemic period, but the unrest period. It's interesting when you look back in the 60s, there was a lot of unrest then as well, and the market actually still performed relatively well. It seems really counterintuitive, but a lot of what's happening in the market is disconnected from the unrest because, we are in a recovery period from a very, very depressed level of where we were in March and April. It is interesting to think about what the impacts might be from the unrest on the economy, though, because in some places you could make the case that obviously it is going to hurt the recovery. And then in other places, you have people now coming out more. You have, people becoming more and more okay with being out in society and being close to people. And so, some places this may actually accelerate the reopening. And in other places, it's going to create damage to businesses and things like that. So it's really hard to think about what the aggregate impacts will be.
Yeah.
Yeah. I mean, it definitely feels like the risks overall are still looming now, even more so with the spread of the coronavirus, with people being in close quarters and, a lot of people being together.
Yeah.
In
it
big
could definitely
groups.
spark a second wave.
I mean, that's kind of a no-brainer at this point. We're kind of expecting the numbers to spike. So that's definitely a risk that's looming that could affect the stock market going forward. It could affect businesses having to shut back down if regulation or if, states get compelled to tighten up lockdowns again and tighten up businesses. And we don't know what that's going to look like, but it's a possibility.
Yeah.
Right.
And I think we're kind of like the markets are reflecting that kind of weird scenario where we've got the NASDAQ, which is basically tech that just hit a new all-time high. And you've got the Russell 2000, which is smaller companies that is still pretty far off of its highs. And then you've got the S&P 500, which is a lot of larger companies that is basically break even on the year at this point from the open of 2020. And to your point, Trav, about how this could hurt, local communities and small businesses, right? Like the looting and the burning down of small communities. That's not going to hurt the Amazons and the Apples of the world so much as it is your cafe and your small boutique retailers and stuff like that. So to me, it's kind of sad. And there is, like we've been talking about pretty much this whole year, just the bifurcation of like large companies and how half a dozen companies are basically making up most of the gains this year, and everybody else is kind of struggling. So what is the path forward here? What is the way out of this? I know we don't have all the answers, obviously, and we just look at this from the market's perspective is like opportunity, like how do we grow wealth? But there is the human element to like, how do we just make things better? Because it is a very sad period in American history. And like, for me, I've been watching the past year or more pretty closely in Hong Kong with the protests that are happening over there. And it's been really sad to see how China is basically stepping in and just demolishing democracy that the Hong Kongers have had for several decades. And I never thought that we would see something on that scale with the amount of protests in America. And now every single state has had protests, some more. Yeah.
Having protests.
Yeah.
I mean, it's wild.
Yeah.
I do think, when you think about what could come out of it on the positive side, longer term, I have for the first time, I think, seen people from different sides of the political aisles actually saying, yes, like we do need to address racial inequality. We do need to address police brutality and things like that. And so you've got a lot of corporations coming out and making statements. So the optimistic point of view might be that, yes, we've got this unrest and people are looting and taking this to the extreme, but then also the optimist might say, well, longer term, maybe this actually does kickstart some changes that will be positive in the long run.
Yeah. We've even seen some venture capitalists stepping up and saying, we're going to, set up funds for underrepresented demographics. Like I think, people of color represent less than 1% of startup founders that are venture backed, something like that, right? So there are metrics like that maybe we can track and really push to improve.
Yeah, absolutely.
Yeah. So jumping more into, kind of the immediate picture, obviously we know that, the NASDAQ is just ripping all-time highs, just, basically trapping any shorts in the market. And like we talked about last week, Nikki was early to call it. Kudos to you, Nikki, for, really identifying that this was a crowded trade. I mean, really, like on the S&P through here, it just felt like it was a really popular idea to get net short. And I know, Trav, you've been hedging, so you've had some shorts on to hedge the risk, but you at this point, I think, are up quite a bit on the year, even with the short hedges, right?
Yeah, the hedges have been a little bit of a headwind, and I added hedges around 3,100 last week, so it was poor timing on my part, to be fair, but luckily I've had some positions that have, pretty high, they're still very, very undervalued, they're pretty high beta, and so I have positions that are up this week 50%. It's pretty crazy, but that is what I was going for essentially. Was like, hey, protect my downside, but if things do continue to have this, explosive green shoots rally, then I should, because I'm still net long, be okay. And that's worked out all right. So I feel pretty good about where things are at, but incrementally, I'm not getting any more aggressive about putting on new positions. And in fact, I've been trimming some positions.
Yeah, that's good. It's interesting, and I want to kind of just talk about like the mental side of what's happening in the markets, because on every market downturn, there's always a story why this is the end, right? The perma bears come out and, and then people get angry. They start blaming the Fed, right? Right or wrong. But on every market downturn, there's always a story why this is the end or why the market's not going to recover. But over time, it does. And the people that rationally know buy low, sell high, they don't buy low, right? They capitulate. I've seen it. I mean, I've talked to dozens of people over the past couple of months that are like, Chris, you guys are crazy. Like, why are you buying this dip? Like, this is going to be a depression level, blah, 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 right? And granted, it could still turn into something like that. And in some people's personal lives, they are experiencing personal depressions, right? Where their jobs are gone and they're suffering. And like, we feel for those people, but as a whole on the economy and the markets, like it's very difficult to do what you guys did is aggressively buy when the markets are down so huge. I don't know. Do you guys have anything to add? I guess just like on the mental side of like, you know, what it takes to really buy when it feels uncomfortable like that.
I mean, as I've said before, I think understanding the fundamentals behind what actually drives the market, meaning understanding companies and earnings and, you know, looking at prior history, what earnings did during recessions or depressions and kind of making comparisons. And that helps me. That's what helped me during that time. I was literally doing the math, like doing EPS estimates, like, how, okay, if we end up, you know, decreasing this much in earnings, what does the PE ratio look like in this case? And, you know, I was building out all kinds of different scenarios. And to me, it didn't make sense that we would see some of the levels in the S&P that people were claiming. Like we were seeing, you know, the S&P is going to go to 1,200 or 1,500. And what's the lowest it got? Around 2,200.
Yeah.
And when I did the numbers and I ran it, I was like, that doesn't make fundamental sense so much to me. But, you know, I don't know. Like that's what gave me the confidence to go in March and start buying. I don't know about you, Travis. But
yeah, I think that's a big part of it. And confluence of factors, having a longer timeline, you know, longer time horizon, having the experience of going through one of these already with 08, 09 time period, and also studying kind of the 2000 to 2002 decline as well. So having that that knowledge and experience, and then also knowing that the federal government, both on the fiscal and monetary side, was taking action.
Mm-hmm.
This doesn't look like 1929, 1930 because we have a different set of tools and a different, you know, modus operandi as far as the federal government's concerned. So, yeah, I mean, I think those things helped us. I'll say that I didn't know that 2,200 was going to be the low. I was pretty fully invested, but I was prepared for further downside.
Mm-hmm.
Yeah.
Yeah, I think we all had some cash on the sidelines in case it went lower. You know, there was no...
I didn't have that much.
Yeah.
I was pretty fully invested actually by mid-March, but yeah, I think there were other people, I think, like you and in our community that still had dry powder.
Yeah, I had dry powder. I was investing, but at the same time, I wanted to leave some room just in case.
Yeah.
Because you don't fully know. But some of the depression comments and some of the levels that people were predicting just didn't seem realistic to me.
Yeah.
And they felt like back the truck up situations. Like if we did see these levels, I'd be like, you know, everything I've got back in the truck up, because history, you know, the market, if you have a long-term time frame, it could have been a great opportunity.
Sure.
But we never got there.
Yeah.
And we, you know, I don't know if we will or not, but
And this is one thing that I was kind of pointing out. When was this? Late February, when the sell-off first started. I started looking at all the people that were talking about, you know, how sharp the sell-off was and how this was going to be, you know, lead to like super lower lows. And then I went and I looked at the 87 crash, which this fell about from the where the extreme selling started, about 35%. And then I ran some numbers looking at, you know, what a 35% dip would look like in the ES at this point, and that lined up around that 2200 point. And you can see, I mean, that is where the market bottomed and got like a similar kind of V bottom recovery. And I was, you know, I did a survey on Twitter around this time and asked, like, what do you guys think? Is this going to be a depression, a recession, or a V bottom bounce? And it was like, most people thought it was going to be a depression, which made me think like, okay, maybe this will get bought up. And it's just interesting to see that V bottom actually did play out.
yeah, and as Travis mentioned, which I think is very important, and I even outlined this in the chat one day because I was trying to make sense of it all at that time. And I was like, okay, and during the Great Depression, there was no, you know, monetary stimulus happening. I think they were doing the opposite of what they're doing now,
they were
right?
tightening, right?
Yeah. During the 2008 recession, we didn't have this stimulus boom and that we've seen. This was a massive stimulus package.
Yeah.
We didn't have that during 2008. So there were a lot of little things to kind of put it all together to come to some type of conclusion, or to try to, I don't want to say justify what was going on, but make sense of what's happening.
Sure. So why don't we talk about like what news has come out recently and what kind of economic developments we're seeing in the short term. Like, for example, today we had jobs report come out, we actually added, 2.5 million, and the consensus was we were going to lose 8 million.
Yep.
What do you make of that, Trav?
Yeah, so pretty interesting that the consensus was so far off. But, it's not that surprising to me. I've been saying this for about a month when I keep talking about the green shoots rally that we're in and that we were having and that I thought would continue at least for a little while. A big portion of the job losses was the service sector. So as we all know, things like restaurants and retail were literally shut down for 2-3 months. And as those things reopen, as places like restaurants and retail and casinos, all those things open, we get those jobs back pretty quickly.
Yeah.
So people who look at the 20% unemployment number or 15% unemployment and think that it's the worst since the Great Depression and yes, it looks really bad in the short run, but the recovery is going to be a V bottom in unemployment. Now, it may not get back to the same level that it was at. I doubt we're going to be back at 4% unemployment this year or next, but a lot of the big chunk of those jobs will be recovered because they are specifically in the service sector.
Yeah.
The ones that I'm more worried about are the professional jobs and the higher paying jobs. We did lose some of those. We showed that spreadsheet where people were tracking some of the
tech layoffs from big like Uber and stuff like that. Yeah.
That's why I think we will end up in an area where we do have some permanently higher unemployment. Maybe it's 8%, 9%, 10%. We don't know yet. But this spike doesn't surprise me too much.
Yeah.
I am surprised the consensus was so far off. I think they probably thought that recovery was going to come more in June. But you had states like Texas, Georgia, Florida that reopened a little sooner than some of the larger states like New York and California. So I think a lot of that has contributed to this number.
Yeah, and it'll be interesting, I think, maybe over the next 1 to 3 quarters to see how much of those restaurant jobs and service industry jobs come back and stay back.
Yeah.
Because there are a lot of restaurants that are probably going to close and not reopen.
Yeah.
I don't know. I don't follow that market too closely, but I know restaurants are on paper thin margins as it is.
Yeah,
and
that's
with
an
this
interesting point because
Yeah.
they may reopen, realize they're not profitable, and they just can't sustain it.
Yeah, and then
shut
states that are like, no, you can only operate at 25% or 50% capacity. It's like, well, we can't make money at that. We might as well just close our doors. And so hopefully that doesn't happen. I think the biggest risk to that is obviously the second wave. What if we shut down again? Then that could cause a massive contagion.
Yeah.
I don't think America's going to let another shutdown happen without a fight. I can tell you that.
Yeah.
I don't think they're, after what I'm noticing, it doesn't seem like people are just going to shut their businesses willingly and be like, okay.
That's a really interesting point. That's something that's been in the back of my mind. I'm glad you verbalized it. Because, what happens if, especially with a lot of the people being out in the protests and things like that and being in close proximity, we may have accelerated the second wave if there is going to be one.
Yeah. And what if there's not? Then it's like, oh, okay, was this all for naught? There's already people stepping out saying this was unnecessary in the first place.
Yeah.
And so I don't have the answers.
I don't think we know yet. But
Yeah.
what happens if there is a second wave and the numbers start to go up again? What happens? Like you said, who pushes? I mean, there's going to be a lot of people that push back on going back into quarantine after going through that.
Unless the government plans on paying all of our bills, I don't see how businesses are just going to be like, okay, yes, we'll do this again. Let's go through this again. More PPP, more this, more that. I just don't know if I see that happening.
Yeah.
One of the reasons I've been selling into strength here is because, and why I added hedges is because we are getting the green shoots rally, and I was prepared for this. I knew it was coming. We played it well from a trade perspective. But at this point, look at the air travel data, for instance. It went from 6 or 7% of last year's totals, and it's gone up quite a bit just in the last couple of weeks. Now we're at 15%. Well, we're still at 15% of last year's flying numbers. So,
still super low.
Yeah,
low.
the trend is good, but, we need to be at 60 or 70 or 80. And
unless more people are just traveling by car and they're still going and traveling.
Oh, I think that's part of it,
too. And they're going
too.
to stay in hotels and they're going to stay at Airbnbs, which, by the way, you can't find a damn Airbnb to save your life right now.
Yeah.
Anywhere nice.
Yeah.
So, it could be they're just trading air travel for car travel.
Sure.
I think that's a big part of it. But just generally, I mean, yes, you're seeing a lot of people return to restaurants because they're like, I've been, eating at home and I want to actually eat at my favorite restaurants again. But what happens in a month or 2 or 3? And same thing with the unemployment numbers. Big sharp V bounce. but it's not going to get back to prior levels. And so then the struggle becomes what happens in July, August, September, October. That's where I'm looking forward and going, yeah, everyone's like on this green shoots rally now, and we called it. But now I'm looking ahead to the next thing, which is 2-3 months out. And that's why I'm selling into strength.
And I agree with that. It definitely, being up right now, it's almost like a little uncomfortable. It's like,
Feels
okay,
weird.
I need to like you definitely have that in the back of your mind. What does this look like in a few months when unemployment is no longer a bonus of $600 a week, right? If they don't extend that, what does that look like? What if we do get a second wave and people are getting sick left and right? I don't know. There are definitely risks looming that people may not be visualizing right now because everything just kind of feels euphoric in the markets.
Yep.
So definitely.
Just because assets are back at all-time highs doesn't mean the economy is doing a V-bottom bounce, right? And when the weight of that catches up with asset prices, like you guys said, that could create that second wave down.
It might be a little hangover.
Yeah.
We'll
And
see.
it could, it would kind of be nice to actually see that if we got even like a W, like a double bottom or even a lower low, another buying opportunity. So you sell into strength, you make some money, you hedge short, maybe even get net short in some stuff. And then on the washout, if the economy deteriorates, that gives you another buying opportunity.
Yeah, I think a pullback would be nice.
And there's a like this middle path that we're kind of walking here where I'm not fully going to cash. Like I'm still keeping a lot of my longer term core positions on, or maybe I'm trimming them a little bit, adding some hedges here. I'm still net long because that's generally my longer term bias. But I was greedy when others were fearful, and now I'm going to be fearful when others are being greedy.
There you go.
Yeah, hey,
I love it.
Hey,
Talking about Buffett.
next Buffett.
Warren Buffett.
Buffett kind of is getting slapped around a little bit this week. Let's take a look at some airline stocks.
Hey, hindsight's 2020.
Hindsight
okay?
is 2020, and he's in a different. I guess his goals are different now. He's not really trying to grow actively.
He's in risk or capital preservation phase.
Yeah.
Yes.
So he sold the low. Did you guys buy airlines?
Yes.
I can't remember.
Yeah, a little
What'd
bit.
you buy?
A little bit. I had a little bit of Delta, and I've actually gotten out of the position today, but it was a small loss for me overall. I traded this poorly. This
really?
was one that I didn't approach with the correct strategy throughout this cycle, but that's okay because luckily I made it up on other areas, and I have some other travel exposure that did really well. Like I bought some airport operator stocks, which I felt were much better risk reward for the long term than playing the airlines.
And
that's
Trip.
Yeah, and TripAdvisor, and so that stuff has worked out beautifully. But yeah, Delta and I actually took a short trade in Southwest before getting out like pretty quickly, and that would have been a good one if I had stuck with it. but this is really tough because again, I was watching those traveler numbers and they were improving, and that first derivative and second derivative was looking good, but the airlines are still potentially going to be in real trouble later in the year if passenger numbers, if load factors are still below like say 50 or 60% for an extended period of time.
Yeah.
Again, risks still loom here.
Yeah. I mean, and when you have a market or a sector like Southwest was down, about 60-65% from the highs. This, you could call this a short squeeze or just a dead cat bounce, right? So just because stocks have had a pretty aggressive bounce here, like Love was up 85% from the lows, right? Just because you have this bounce doesn't mean that the airlines are out of trouble yet.
Yeah.
No.
So, hindsight's 2020. A year from now, it could turn out that Buffett was absolutely right and made the right call to get out of airlines. But I don't know. I'm not super bearish on airlines over the long term because what are we going to do? Stop flying?
No, I'm
come on.
not either. We could just see some consolidation among the industry, less airlines.
Yeah, I think that the more financially troubled ones are the ones with more debt are the most at risk. And so if the flying doesn't come back quickly enough, they're going to be in restructuring mode. And the healthier ones, like, say, the Southwest of the world that have a stronger balance sheet, are going to be the ones to take that market share. But yeah, I think over a longer time frame, air travel is absolutely almost certainly going to continue to grow over 5, 10, 15 years. So
yeah, even let's talk about cruise lines.
Yeah.
Nikki, you bought Royal Caribbean.
I did.
We're-
I need to. oh, I need to take some profit right now. Like literally.
Yeah, it's up 27 right now.
27%
I
today.
literally may need to like take a break and take my profit.
This is
your phone
hilarious.
out.
Yeah.
Holy shit.
Yeah.
Well, this is a first for the show.
Is that a delay? Is that delayed data?
Yeah, this is slightly delayed on TradingView.
Okay,
Yeah, take some profit.
I
So
need
good
to sell
trade,
some
good
of
trade.
this.
yeah, beautiful trade. You were getting in, I think, over here, right? I love it, man. So yeah, so
boy.
anyway, I mean, a lot of this stuff just got so beat to death, right? What was this off of the highs?
Do you want to
Royal Caribbean.
pause?
No, let's just keep going.
Okay.
Screw it. Yeah, Royal Caribbean was down over 85%. So not surprised to see a pretty aggressive bounce. I mean, even here, we're just coming back into the fib retracement zone. So, it's just about to tag the 50% pullback from the sell-off. So lots of room to bounce around here.
Yeah, absolutely.
Yep.
You
While
know, on
Nikki's working on that, go ahead.
Well, on the Buffett thing, so one of the funny things about Buffett is that he did sell the airlines near the lows, and it may end up being a mistake, or it may, in the longer run, or in a year from now, look smart. But he still owns like large stakes in many other companies, including like if you look at Apple, for instance, his Apple I think is one of his top 2 or 3 positions, and no one wants to talk about how that's still crushing it. So
True,
it's like
yeah.
funny to think about. I think Buffett's doing fine. And again, his goals are a little different at his age now. He's trying to make sure he preserves his legacy, preserves his capital.
Yep.
And there's guys like Dave Portnoy who are taking shots at him, and I'm pretty sure Dave is still down. Like, I'm pretty sure he was down $9 or $10 million at one point. He's probably made a few million back.
Yeah.
I'd be willing to bet he's still down.
Yeah.
So I don't think he can knock on Warren Buffett, given Buffett's like 40 or 50 year investment career. Literally the most successful investor of all time.
And good point. I mean, he was late to tech. He's never really been a tech guy, but I mean, Apple has been one of the best performing stocks. And what I love about Apple is it's very, I don't want to say predictable, but you can see the rhythm. Going back over the past 10 years, we've had basically 4 or 5 opportunities where the stock's sold off over 30%. And each one of those times, there's been a story about why this is the end of Apple and why, iPhone sales are starting to flatten. They're done for, right? But you can see, I mean, a company like this that has that tailwind and that has that level of innovation. I mean, what did they sell over the past year? Like $4 or $5 billion worth of ear pods.
Yeah.
So
yeah.
And even during the coronavirus, their service element
They're
is
killing
crushing
services
it.
and wearables.
Yeah.
Really.
So I don't know. I just think there's so many good lessons in the market right now. And like for anybody that's newer to it and just kind of looking at it going, what the hell is going on? I mean, that's why we do what we do in the community, to try to help people guide through this insanity and really see the forest through the trees and recognize their own biases, see through all the bullshit, right? Because there's so many opinions and everybody's got, fear sells. So you got a lot of newsletters and a lot of people out there that are, talking about why, gold's going to 50K and the stock market's going to 0. And, while I do like gold and I like Bitcoin, I'm bullish on human innovation. And how do humans innovate and make money? Through companies. And how do you participate in that? You buy stocks, right? So even if you are pro Bitcoin, pro hard money, and you question what the Fed does, are you bullish on humanity in the long term? And do you want to get on the backs of people that are innovating and growing great companies?
Yeah. It's well said.
Mic drop.
I guess I've converted you. We've converted you.
Yeah.
No, down with the Fed, down with dollars. Bitcoin is the true money.
We should talk about crypto.
We should.
It's sort of.
Before we do that, why don't we talk about insider trading from
yes.
senators? This is something I actually found on Reddit. So this was an article from, when was it? Mid-May. So Richard Burr steps down after being investigated for insider trading. Basically what happened, and here's a chart. There's a person on Reddit that created this website where you can actually track the trades of a lot of senators. And I thought this was super cool. And this guy specifically, you can see like his buys and sells through here over the past several years. Well, he actually dumped a ton of stock right before the stock market crash. And I think this is kind of an interesting thing because I don't know if it's inherently illegal for senators to trade based on macro, being privy to like information of that sort. It's not like having access to non-public information for a single company. It's like, no, you just know that the world is about to be screwed in a couple of weeks. And so, yeah, you jump out of your stocks. Trav, what do you think? Is that illegal? Is it unethical? You know, what do you think?
Yeah, it's certainly, I think, tilted towards being unethical. I'm not sure about illegal. I don't have the legal background to really be able to answer that, but it's certainly, it raises eyebrows and it raises questions. And you're right. Like if it was a specific company that he had material non-public information about, it would be very clearly insider trading. That would be illegal. But with an event like this where there were news reports out there in January and February. We knew about it. We were wearing masks on our flights in January.
Yeah.
Yep.
So you could make the case here that enough people could have seen this coming or seen the potential risk of a market downturn given the virus just based on what happened in China. So this is going to be a tough one. I'm not sure if they're going to win a case of illegal insider trading against him, but this is a bad look for him, and it's super unethical, and especially given the pain that so many other Americans felt from the fallout. I think that's going to have repercussions for him, and it should.
Yeah. Yeah, I don't know. It's very strange that you've got, and he's not the only one. I mean, there were a handful of people that got caught with this that were privy to information and knew the shutdowns were coming. And so I don't know. It's something interesting to kind of point out, and hopefully there's some regulate. I don't know how you fix this.
There's a good lesson here, though. I don't know if he bought the bottom to buy back, but hey, I mean, if you think about it, this is why time in the market can be tricky, because now he's just been in cash this whole time, and if he ends up having, obviously we don't know what's going to happen with this guy, but just an overall lesson in why market timing can be tough if you're trying to hold like long term, right?
Yeah.
Because now, if he wants to get back in, he's going to be buying the highs.
He's buying right back where he got out.
Yeah. So, I don't know.
Yeah, he might have looked like a genius in March, but now, not so much.
Yeah.
Yeah, especially, it's one of those things, if you can sell high, but like you have to buy back lower if you want to still participate. And if you get one of those wrong, what do you do?
If he was buying the lows, then all, okay, good.
Yeah.
But
well, according to this chart, he wasn't. I don't know if it's.
That's what it looks like to me.
Yeah.
I mean, he's probably not allowed to trade anymore. For the short run, his lawyers are telling him, hey, man, maybe you should lay off stocks for a little while.
It was just a side note.
Yeah. You guys want to do some Q&A?
Yeah, let's do that.
Well, obviously, we'll talk about Bitcoin. I've got a Bitcoin question in here, but let's start with, I think it's Amelia asks, what are the inherent risks of leveraged ETFs? And maybe we can start by answering what is a leveraged ETF and talk about some of the risks.
Yeah, so a leveraged ETF is a exchange traded fund that uses leverage in its holdings, and typically they rebalance either daily or weekly. There's lots of different leveraged ETF products. You can go like leveraged long certain specific stocks. I think there's even a leveraged Apple ETF now, or there's leveraged, you can go long stock indexes through a leverage ETF so you can get like extra juice on the upside. You can also bet against the market with downside leverage ETFs. So they have like 3x bear ETFs, like SPXU and stuff like that.
SPXU.
SXP.
SPXU.
It's hard to say, right? It's hard to say.
Say that five times
That's, I think,
fast.
the 3-time leverage.
Yeah, ultra short. Yeah.
Rich, yeah.
And you can see, so the problem with ETFs is, you can actually see it in this chart if you go back on a long enough time frame, is most of them lose value over time. Even if the underlying assets that they hold can actually gain some value over the long run, volatility actually creates some headwinds and decay in the asset over time. And there's some good articles out there online about this, but basically because they rebalance every day or every week, that means that a large drawdown cannot get made up by the upside on a one-to-one basis. So let me give you an example. So if you have an asset that goes down 50%, then that asset needs to gain 100% on the upside to get back to break even.
Yep.
Well, these leverage ETFs, what they'll do is, say the asset's down 50%. Well, they rebalance. So they actually it's the mechanics of it are a little weird, but basically that ETF now is down 50% and it has to gain 100 just to be back to break even. And so over time, that creates this headwind where the losses are more than the gains, and those losses eat away at the value of the ETF over time.
Gotcha. So it's the math is probably a little complex to show for the show, but in essence, like it's like anything else. Like leverage can work for you, but if you're holding these long term, you do have a headwind against you.
Yeah. I didn't explain the rebalance part exactly correct, but basically they have to realign the leverage that they're using, the margin that they're using back with the underlying assets each day or each week. So they have to sell or buy a certain amount of that asset. And because they're using leverage, it magnifies the impact on the underlying holdings, the amount that they can own. So
aren't they potentially locking in losses?
Yes, exactly. Yeah.
Yeah.
On the rebalance,
along the
they're
way.
locking in the 50% loss, which means now they have less holdings, and those holdings have to go up much more just to even get back to break even.
Which is why most people day trade these instead of most people tried to day trade the the leverage ETFs that follow the SPY or track the SPY in either direction. And those are really popular, but most people are just day trading them.
And I wonder, is there any benefit to that over like the E-minis, like the S&P E-mini or even the micro E-minis?
If you're using, if you can get leverage on futures, then no, they're really, in fact, I actually prefer the index futures with margin as opposed to the leverage products. So again, like Nikki said, like they're really not meant to be, the leverage ETFs are not meant to be products that you hold for more than a day or a couple days because they have that volatility tax. They have that decay over time.
Gotcha.
Which you can clearly see in the chart.
Yeah.
I mean,
well,
absolutely.
and that's one that's even worse because the market has an upward bias over time. But we could probably look at some leveraged ETFs that actually have the underlying assets that even maybe go up over time, but even those go down, like the
UPRO?
Yeah, or the gold miner ETFs or things like that, where they took a big drawdown and now the gold miner stocks are up a lot, but the leverage ETF didn't keep pace with the actual underlying assets, the underlying gold miners.
Gotcha. So probably the general advice would just be like stay away from these unless you have a very specific reason that you have to trade that product.
Yeah.
Yeah. Or know what you're doing.
Yeah.
Know the product.
Right.
Yeah.
Before you go throwing money into it.
Yeah, if you want to learn more about the actual mechanics of it, just Google leveraged ETF decay or leveraged ETF volatility tax, and you can read about, why this actually happens. But
Gotcha. Good stuff.
don't hold those for more than a day.
Yeah. Next question is from Kelly. Why do two stocks have different names but are almost identical? So I guess Berkshire A versus B, or Google with the L.
There's GOOG and GOOGL. Yeah.
Yeah.
There can be a couple different reasons why you can have two different ticker symbols for essentially the same company. Sometimes it's a different class of voting shares. So you have a Class A or Class B, like with Berkshire, and they actually have a different price. The Class A shares cost a lot more than the Class B shares.
Yep.
But they sometimes have different voting rights depending on which class of stock you're buying.
Sometimes, so like Berkshire Class B is $200 right now, where Class A is what, 300,000 or something?
That's right.
Let's take a look. Yeah, literally $300,000. So what was the story behind this one? I think this would be a good
That's because
example.
they never split it, right?
Yeah, so for the longest time, Berkshire only had one class of stock, and because it kept growing and growing in value over time because of their success with their underlying holdings, they never did a share split or a stock split, and so the price per share kept growing and growing, and we just now have got fractional shares being offered in 2020 for stocks, but for the longest time, you couldn't buy fractional shares. So if you're an investor looking to get into Berkshire and all of a sudden it's at $100,000 per share, well, if you're a small investor, you may not even be able to buy a single share.
Yeah.
So what Berkshire decided to do back, I believe in the 90s, early to mid 90s, is they created a second class of shares that was a lower price per share, and it represented a smaller percentage ownership per share, but that enabled individual investors with smaller accounts to actually be able to get access to or exposure to Berkshire.
So this example is basically just a function of price, right? It's like a way to get smaller investors in that don't want to pay a couple $100,000
And
for one
also
share.
less voting rights, correct?
Yeah. The B shares do carry less rights in terms of voting, and also I believe like passes to the annual meeting and things like that. Like you actually do have a fractional amount of the same rights to participate in Berkshire's affairs.
Yeah.
As a shareholder.
And then what about like Google?
Yeah, and Google, same deal. So there's also founders classes in some of these tech companies where you'll see a Class A and Class B, and the Class A will typically not be held by public shareholders. It'll be held by the founders, and they have like 10x super voting rights, and that allows the founders to remain in control of the board votes and things like that. Even though they might actually have a minority economic stake, they have a majority voting stake through the Class A and Class B. I forget if Google has, I forget the difference in the classes with Google stock, but I know some of the other tech companies that have dual class share structures.
Yeah, Goog with a L is Class A, and then just GOOG says Class C.
Yeah,
So
forget exactly the difference, but also there can be other differences why a company can have two different tickers as well, which is that they can trade on different exchanges. So you might see like a global company, especially a large company, may have shares that trade in the US, but also in Hong Kong, or perhaps London and also in Hong Kong. And so sometimes you'll see that as well with certain companies that have listings in multiple countries. I believe like Deutsche Bank is one of those. And I believe there's a lot of them. We could mention a few examples.
So the main categories, I guess, would be either differences in price to give access to different sized investors, differences in the class of shares with voting rights and control, and then different exchanges. I guess those would be maybe the three main use cases.
Yeah. Yeah.
Cool.
Say so.
Oh, well, and we might be forgetting too, sometimes stocks have a preferred class of shares and a common stock.
Oh, yeah.
And those can actually
biggest one, yeah.
and those can actually be very different in terms of their economic ownership of the company or how they're treated. Like some preferred stocks get paid dividends, and if there were ever a restructuring, the preferred stocks would get a bite at the restructured company before any common stock was given any value. So sometimes the preferred and common stock, but usually they have different tickers.
Yeah. Yeah, and they could have multiple ones, right?
Yeah.
Cool.
So a lot of financial companies or banks have that, where like maybe Bank of America has their common stock BAC, but they might have a bunch of preferreds like BAC.C or BAC.Z, or I don't actually know if those are real tickers, but that happens a lot.
Cool. Next question is from Brad. He asks, with savings interest rates falling, because I guess rates are falling, I feel like I'm losing money holding cash. How much cash is good to hold versus investing it in the stock markets? So I think that's a dilemma that's persistent with all investors all the time, right?
I was just talking about this in a webinar, and I think I may have a good response to this.
Cool.
So yes, it's unfortunate that the savings rates are junk right now. You really can't get much yield for no risk, right?
Yeah.
So when I talk to people about trying to figure out how much cash they should have, you have to think about, what do you need cash for, right? So you're going to need X amount for your emergency fund, for whatever dollar amount that may be, to make you feel comfortable knowing that you can get through a crisis. You may need cash to run a business, so you may need to put a bucket aside for that. And just, even though you're not getting a lot of yield in a savings account, do a high yield savings account, keep it in there.
Because liquidity matters if you operate a business.
Absolutely.
Yeah.
Liquidity matters depending on what your goals are and what you're doing, right? You may be saving for a house. You may not want to invest money that you're saving for a house because you don't want to put any risk on with that money. So you have your buckets of what you need your cash for. Once those buckets are full, anything extra that can start going towards investments.
Yeah.
Is kind of what the general rule of thumb that I tell people.
Cool. So have enough for expenses, have enough for emergency funds, have enough to keep your business properly capitalized.
Yep.
And then above that,
whatever you don't need, then you can start allocating to different types of investments.
yeah. Because if you have too much cash, that's getting eaten away over time. And it might be nice to feel rich because you have a lot of cash in the bank or buried in your backyard, but you're essentially losing at that point. And that's where I think Bitcoin and gold come in, because those are also liquid assets, and those get better returns than fiat money.
True.
And another thing that I have been thinking about is the stock market, right? When you can't get yield for no or low risk, what are you going to do with your money? You're going to put it in investments. So I don't know if that is part of the bull run phenomenon that we're seeing right now. People are just piling into the markets because I mean, where else are they going to get yield?
Yeah. I mean, those trillions of dollars in stimulus have to go somewhere.
Yeah.
And I guess that's where, this could be a topic for a whole other show, just talking about the inflation versus deflation debate and all this money getting pumped into the system. It's got to go somewhere.
Cash doesn't look as attractive anymore. And maybe it's purposefully that way.
Yeah.
I don't know.
That's a big part of it for sure. There's arguments to be made that when rates are this low, that the valuation multiples on stocks can be very, very high and they can be justified. I don't know if I necessarily buy that argument fully, but one thing I will say is it is okay to be in cash for a little while, or if you have excess cash, particularly in your stock investment accounts, if that's, the position that you're in, it's okay. Like a few months is not going to kill you of having excess cash, and it does give you the optionality of finding stuff that does meet your requirements or that does potentially give you a good return. Like you shouldn't feel like you have to FOMO into a market like this.
Yeah. I guess the way that I think about it too is like, so you've got your personal cash, your emergency fund, and then you've got business cash for liquidity for the business. And then you've got like what we call dry powder, where maybe you have cash in your brokerage account that you're trying to be tactical with. And like, cause you don't want to be fully invested all the time. And then you get a market sell off and you're like, oh shit, I can't buy anything else.
Yeah.
Right.
Yep, it's a delicate dance.
Yeah.
But in general, I was speaking in terms of just the general cash picture. But Travis brings up a really good point of within your investment accounts, how much cash do you have in those? That's a whole different story and analysis, really.
And then you've got people that are like, look, I don't have a lot of assets to begin with. I'm still working on my emergency fund or getting that kind of foundation set. And so it does kind of go in tiers, right? You got to start somewhere. You got to get that emergency fund first, then have your cash for, just basic living expenses. And then above that, where do you start from there? And I guess that in and of itself could be a topic for another show too. Sure. How to get started with your first like 10K.
Yeah.
I've done a YouTube video about that a long time ago, and it seems to be a pretty popular question.
Yeah.
Okay, last question is from Z Trader. I guess this one's for me. Why hasn't Bitcoin broken out above 10K yet?
Why?
Why the hell have you not moved Bitcoin? He says, I thought it would go up after the halving. Well, where do we begin? So here's what I'll say. Just in general, the markets never do what you want them to when you want them to do it, right?
Yep.
No.
Like if everybody is expecting a market to do something, it's probably not going to do it because everybody's expecting it to happen and there's nobody left to make it happen, right? So like if we take a look at Bitcoin right now, we'll just jump over to the charts. You can see as of the recording of this video, looking at a multi-month picture, kind of zooming out, you can see that 10K has been resistance for more than the whole year. And this is really the third kind of touch of it. And we're squeezing into this area. Disclaimer, I am long into this area. So we bought on the first washout here, bought in the 7Ks on this breakout. I even added a little up here around 10K and you can see we had a little bit of a trap. So right now, as the market kind of coils up, yes, this is a big, important zone. 10K is the most emotional number I can think of, next to 100K, right? So a lot of eyeballs on this. And my opinion is that the longer the consolidation happens, the stronger the moves, the bigger and the more sustainable. Like going back to 2016, we had several breakouts that actually took like 6 months to play out, right? Like here from June 16, didn't break out until December. And then, prior to that, we had a top in November 2015 and didn't break out until May 16. So I'm not necessarily freaked out when Bitcoin consolidates or goes down. In fact, the longer this consolidates, the better I actually think it is for more sustainable moves to the upside.
Yeah, totally agree.
Yeah. And then, looking at, the log chart and stock to flow ratio and things like that, there's different ways to model this. But if you look at a log chart, which basically measures exponential parabolic moves, you can see, this looks extremely bullish. So if 10K does break and we get sustained moves and we get daily closes above that, I think that could be the start of another big bull run if that, we've talked about this before, but just every 4 years with the halving, and then you get the parabolic run followed by the deep crash. It's been to date the most predictable market that I've ever traded or invested in. That could fall apart now, or it could sustain forever. Who knows? But this is something that I just really love trading and investing in, and 10K is definitely the level. But just because it hasn't broken out a few days after the halving doesn't mean that it is dead. In 2016, we had a big washout after the halving, which took out a lot of week longs, and it actually took several months for the bull trend to actually kick in. So patience, you guys.
Yeah.
Patience.
Do you think that the volatility and especially lately the strength in the stock market has had an effect on Bitcoin?
I would think so, right? Like when stocks are going parabolic, that sucks up capital flow. And then when stocks are crashing and they're selling off into other assets, not everybody's just selling into cash and holding cash. Some people are selling stocks for gold, selling stocks for crypto, selling stocks for hard assets like real estate or other commodities. So yeah, I mean, and it's kind of what we see with the balance between Bitcoin and altcoins. It's like when Bitcoin has a big run, that initial spike, most altcoins stay flat or sell off. And then when Bitcoin starts to take profit or pull back after a big run, that's typically when alt season starts, and you get a lot of altcoins that start to gain momentum. So
yeah, I could see if stocks cool off mid to late summer, that perhaps some of that speculatory fever moves back into crypto potentially.
Yeah, and especially if the economic situation doesn't get better, people are going to be like, okay, we definitely need to be hedged. And, we talked about this over the past couple of weeks, like legendary investors like Paul Tudor Jones getting in and publicly doing it, and other big funds really starting to pile in. So I don't know, timing big moves in Bitcoin is hard, but seeing the forest through the trees and understanding what's happening and how this is growing exponentially over time is very easy to see and understand. So I'm a bull. We could wake up tomorrow and this could crash for whatever reason. So I'm not 100% in Bitcoin. I have a large allocation, but it's comfortable. And I don't know. My advice to anybody out there is just like, if you're going to buy Bitcoin, buy an amount that if it went down by 90%, you would still be okay. You wouldn't be hurt financially, and you wouldn't capitulate and freak out and sell the bottom. You would have more dry powder where if you like it still, you buy it even lower prices. Yeah. Unfortunately, no matter how many damn times I say that, most people will do the opposite. They'll pile in, they'll get over leveraged, they'll emotionally chase bull runs, and then they'll be the ones that we pick up their bags when they panic sell.
Yeah.
So I don't know, just patience, guys. That's all I got to say.
Yeah.
So that's it for the questions, but I have a question for you guys.
Sure.
Where are you most excited about going once travel really opens up internationally?
Ooh, good question.
Internationally?
Internationally, because right now, I mean, domestically in the U.S., we can kind of drive to wherever we want, and that's why I think a lot of, like you said, the Airbnbs are full.
I kind of want to go to Hawaii, though. That's still domestic, but it's,
You gotta take a flight.
You gotta take a flight.
And I think, if I'm not mistaken, they're basically down to hardly any COVID cases there. So I don't know what the travel restrictions are there, but Hawaii is your top pick?
I would say so.
Okay. That's like the worst time zone in the world for trading, by the way.
It totally is.
It sucks,
But after all this, I may need a break from the markets.
Yeah.
There you go.
What about you, Trav?
Oh, I'm kind of itching to get like kind of maybe off the grid a ways, like perhaps somewhere like Argentina or New Zealand, maybe Southern Hemisphere, really into some nature, some hiking, some mountains. I think that could be cool.
Yeah, man. Get away from cities, get away from people.
Yeah.
Get into a Zen mindset a little bit. Yeah, I'm with you on that. New Zealand's been at the top of my list for a long time. They're down to 0 cases. They've got, just really cool people. We've got some friends down there. And
what's yours?
New Zealand.
Oh,
I would say New
okay.
Zealand. Yeah, Trav stole mine.
All right, I'll go to Argentina. You go to New Zealand.
Okay, cool.
Or we'll go together.
Or we can all just go to New
We'll hit
Zealand.
both.
Yes, we'll take the show overseas.
Yeah.
Definitely got to get back to Bali. I love Bali.
Oh, yeah.
I don't know. All right. Well, any final thoughts? Anything to tell the folks out there watching or listening on the podcast?
I just want everybody to stay safe.
Yeah.
It's there's a lot of like tension. There's a lot of stuff happening. Obviously, like we said earlier, I think we sympathize with a lot of different parts of the movements that are happening, but also like we understand the complexities of it, and we want people to stay safe. And That's
well
really
said.
Yeah.
Yeah. Stay mentally balanced too, right? Like it can be tough, economically, physically, but if you're in an area where you can't get out much, like do what you can to keep your mind right.
Yeah.
Cool. All right, guys. Well, thanks for watching. Feel free to go to wetalkmoney.com to submit a question for the show. Subscribe on iTunes or anywhere you listen to podcasts, and have a great week, and we'll see you next time.